The oil price, as you can see here, I mean, depending on your broker, but this particular um, chart is giving us um, this FXCM is giving us a um, level which is being the last week's highs. So you've got last week's highs that the market broke out of on Monday. Tuesday consolidated, pulled back. So that's a 3-day template, pump, and a dump. Now, if we scroll back further, we got a breakout of last month's highs on March, and then again, sorry, March the 1st, and then again March the 14th. And we've essentially been bid ever since March the 14th. So there's quite a lot of length in this market, well, an awful lot of length. And you'd be in anticipation of a squeeze. What I've been talking about this morning since the start of the day, which has not come to fruition, um, is a pump up. Now, we're technically in a bearish environment, and I'm looking for a bearish close for tomorrow, potentially, depending on how things pan out between now and then. But tomorrow, looking for an extension of the bearish close that could happen today. Okay, so this is the day so far. Perhaps we'll have a bearish close and then looking to short that on Thursday. However, for the meanwhile, we are, as I said, um, testing below last week's highs. Most breakouts tend to fail, so markets tend to break out, pull back, and they either continue or reverse, or say stay sideways for a period of time. But at some point, they're going to either reverse or continue. So I'm looking for, well, here's the pullback in play, and I'm looking for that to continue higher, back up into yesterday's lows as a first target. And then the high of the open for the US session, and then the closing price, and then yesterday's highs. But with that being said, and the bias being to the downside, I'd be inclined to stop looking for a continuation um, much further than, say, the 61.8. But let's have a look where that comes in. So that comes in, yeah, the highs of the US Open. So I think I'd be inclined to be taking most of my money off at that level. But that's not to say that this, of course, is going to pan out. This may just continue lower. Or indeed, it might just give us some sideways activity. So it all depends on what setup we're seeing. Can't get rid of this thing. Well, if we get any setups at all. So that's where we're at. Now, the Fed is likely to create volatility. It's not something I advocate trading. I'm just merely giving my outlook for oil, as I talked about at the start of the day, for a long from this level up into shorts. On the other hand, if this were to continue, then I'm just simply looking at the lows of each day on the way down, with stops below likely as target areas. And then we've got that breakout area from 14th of March, as I touched on a moment ago, which is last month's highs. So perhaps a complete capitulation into that breakout is on the cards. Not necessarily for today, maybe over the course of the week. Or, like I said, we could be seeing a pump up before the next move lower. That would be my thesis. With a gun to my head, that is what I'd bank on.